Good evening, everybody, and welcome to this evening's meeting of the Audit and Standards Committee. Can I remind everybody that this meeting is being live streamed and will be recorded for future publication on the Council's website, so can I please ask that everybody turns your mobile phones off or puts them on silent for the duration of the meeting. Moving on to item number 2, apologies. We have apologies from Councillor Hartshorn, who is substituted this evening by Councillor Evans, and we also have apologies from Councillor Shepherd, who's substituted by Councillor Watkins. Are we aware of any other apologies? Councillor Kenny.
Thank you, Chair. Just to issue the apologies of Councillor Downs and Councillor Tromans. Thank you.
Item number 3, do members have any interests or declarations that are not printed on the schedule? As we have no public speakers, I will move on to item number 5, but before we move on to item number 5, I would like to propose from the Chair that as the recommendations in the report cover items 5 and item 6, that we move them as one item. Do I have a seconder for that? Councillor Kenyock. Is everybody else in acceptance with that? Anybody against? No. In that case then, I shall move over to Vicky to introduce item 5 and Will for item 6.
Thank you, Chair. The statement of accounts for 2021 is now completed, bar a few little bits and pieces to still finalise. Overall, the numbers themselves they should be accurate in the accounts. So I'm going to just quickly have a quick talk about what's in the accounts, what that includes, and then I'm going to pass over to Will, who will talk us through what was found in the audit. So ultimately, the accounts themselves, although there were a number of adjustments that have been made in the accounts, they're all technical accounting adjustments, so they have no impact on the overall the usable reserve position of the council. So the general fund balance of 2.2 million still stands as it was last year when the accounts were published, as does the HOA balance of 6.4 million, so nothing has altered on those. We have usable reserves of 39.5 million as at the end of 2021, with 140.5 million of unusable reserves. It's the unusable reserve balance that has moved. That's the element that's moved, but that is not something that the council themselves we can't spend that on anything. As I say, there's been a number of different adjustments, and I'm going to pass over to Will, who can then just talk through the adjustments that have happened, and then I'll take any questions. Thank you. Go on, Will.
Thank you. Hello, everyone. So the report that I'm going to take you through is the audit findings report, and you may hear this called an ISA 260 report as well. So this just summarises the findings from our audit and goes through the audit adjustments, any unadjusted errors, and the work that we've done generally. So the first page I'd like to turn to is page 3. So this is overall headlines of what we've done. So under the code, we're required to report whether, in our opinion, the financial statements give a true and fair view of the council's financial position and have been prepared in accordance with the code. Our work's largely completed, but there are some areas still outstanding, which are shown on this slide, and we're hoping to get those done over the next couple of weeks. We plan to issue an unmodified audit opinion, but we do still need to agree a couple of amendments that have been made to the accounts just to the sort of supporting working papers and whatnot. Page 4, so this just carries on those headlines. So our value for money work is not yet complete, and as discussed previously, we'll aim to do that by November 22, but because the value for money work isn't complete, we can't issue our certificate, which closes the audit. Once the value for money work is done, hopefully in November, we will be able to issue our certificate and close. We also detail on this slide the difficulties faced during the audit, which is why we're doing the audit findings report now, but they've been communicated to you previously. So page 5 is then our audit approach. So management considered whether NABCEL required consolidation into the financial statements, and on the basis of materiality, both by value and also through the nature of the business, it was decided by management that they didn't need to consolidate NABCEL, and we agreed with that conclusion. This slide does state that the opinion is in Appendix E, but we decided to table that as a separate item on the agenda, so apologies for it still stating that. Page 6, that sets out the materiality that we used on the audit. So you'll see that headline materiality is 1.8 million and performance materiality is 1.17. And I think trivial was 90k off the top of my head. Page 7 then, so this is where we start to get into the findings from our work, and this is the first significant risk. So this is a presumed risk of management override of controls under ISA 240, and we've noted 2 deficiencies in the council's journal control environment. So the first one is that not all journals are authorised by a senior member of staff, but the council rely on budgetary control to identify any unusual postings that may have happened. And the second one is that the council have super users on their sort of system. Now, super users, whilst they're practical because they allow people to log in and solve issues, there isn't a log maintained of those times when the access has been given, which means that a super user can log on as another user and post, or potentially post, something in the audit trail wouldn't be able to spot that. So in lieu of those, we increased our risk on the journals, and we tested a significant amount of journals, just over 60, I believe, and we didn't identify any errors in relation to the journals themselves, in that they were posted correctly and were not in any way management override of controls. We also looked at the accounting policies and estimates of the council. So whilst the accounting policies were fine, we did ask the council to add in a couple more just to make them a bit clearer to the users of the financial statements. And we did identify one error in relation to the NNDR appeals provision. And this one really is just that guidance changed after the date that the financial statements were issued. So the council could no longer provide for a like a one-off change in circumstances. And that resulted in a reduction of the provision by 710k. But again, this doesn't affect the general fund balances. It's all in sort of technical accounting adjustments that comes through. So page 8, this is the other presumed risk from ISA 240, and that is that revenue recognition is improper. So as detailed in our plan, we had rebutted that error, and our reasons are set out on this slide. We didn't identify any errors in relation to revenue recognition, which is good. This page also sets out our work on the pension fund net liability. And although we haven't identified any issues with the estimate, there is something that I'll talk about a little bit later on, just to bring to your attention. So page 9, this sets out our findings in respect of the land and buildings valuations. And this was one of the significant risks we reported in our audit plan. We identified a couple of errors here. Firstly, on the Pingles Leisure Centre, and I think we spoke about this in the progress update a couple of weeks ago, that it was understated by 713k. And we've also got another error in relation to Gresham Road, whereby it hasn't quite gone through the revaluation reserve correctly. Now, that has been updated in the revised set of financial statements, but we haven't had a chance to just go through that yet and just check that we're happy with the numbers where they've changed. So once we've done that, we will issue sort of revised slides just confirming that we're happy with the adjustments that have been made. Now, something else in the revaluations of land and buildings is where the car parks come in. So they come in under the sort of investment property umbrella that's caught. So there's a lot of loss-making, or there's quite a few loss-making car parks that are valued at nil. Now, we challenge this on the basis that if you were to sell those car parks, we don't think you'd sell them at nil. We think you'd try and get something for them. But under Rick's guidance, that is the correct way to value them, as you value them at their existing use at that point in time. So it isn't a material issue for the council, but we'll continue to monitor it in future years of audit. Page 10 goes through a couple of additional risks that we identified in our plan. So first of all, it was the recognition and presentation of grant income, and this was solely really around the COVID grants and the additional COVID grants that you'd been given as a council, either acting as an agent or a principal. So we did a lot of work on that, around whether you were an agent for grants and whether you'd correctly recognise the principal elements in your financial statements, and we didn't identify any issues in relation to that. And then the other area was around the new housing system, which was Civica CX. I think that came in now in September 2020, I think, actually. So we had our IT auditors come in and look at that. And whilst they did find some deficiencies and some recommendations, they're still being agreed with management. And so once that report is finalised, we'll present that to this committee as well. I suppose the important thing to say there is as far as I'm aware, we haven't identified any areas where tenants weren't being paid or were being mispaid. It's just around the process of installing the system, is my understanding. Page 11 jumps back onto land and buildings revaluations. I've spoke about the other couple of areas, so the main one to note here is just that the internal values reports are quite light in detail, and we've raised that as a recommendation later on in our report. Page 12 talks about the pension liability estimate. So we've done a lot of work on the pension liability in terms of agreeing the actuary report through to the accounts and challenging the estimates themselves. We also get a report from PwC as our experts, and the assumptions that the actuary have used are in line with what their acceptable ranges are, which is good. There was an error identified on the pension fund's accounts, though, by the pension fund auditor, which meant that the assets of the pension fund were understated by 4.3 million. Now, Nuneaton, being a member of that pension fund, do take a share of that, and the share is about 319k. Now, the potential of that is that it could reduce your pension liability, but because it is just one input into a mammoth calculation, it isn't fair for us to say that it will reduce it by 319k. It may vary slightly from that, but we're just bringing that to your attention here just because it'll all sort of come out in the wash next year when the new valuations come through. Page 13 goes through the NNDR appeals, and I've mentioned to you previously the error we had on that. It was for 710k, that one, if I didn't mention previously, and it also talks about council housing and the valuations on council housing. We did not identify any errors in relation to the valuation of council houses. Page 14 is then our other communication requirements, and on here it does say the letter of rep is in Appendix F, but that has now been tabled as a separate item for the committee. We've also noted, and we've raised a recommendation for this, that at the 31st of March 2021, not all declarations had been received by members, and so it's something that going forward the council should look to make sure that all declarations have been received by members throughout the year. There's also a number of assets, so on this slide, there's also a number of assets that were fully depreciated on the balance sheet. Now, whilst that doesn't actually affect your sort of balance sheet figure because they go in as zero, it does inflate the values that are in the notes, so it will inflate the cost that's in, I think it's note 14 for property, plant and equipment, and also the accumulated depreciation. Essentially, we are recommending that the council should review those assets and identify whether any are still in use and whether potentially the depreciation has been too harsh in the past, but ultimately that won't affect, again, the general fund reserves. Page 15 goes on around our work on going concern, and we're happy that the council will continue as a going concern. These pages are a bit quicker now. So page 16, our VFM work's still ongoing, which is why we can't issue our audit certificate, and we plan to complete it in November. Page 18 sets out our work so far on value for money, and as you'll see, we've really just started in those discussions with management and with the Director of Finance. They had begun previously, but due to the changes in the authority, we're sort of almost starting afresh, if you like, with the new Director of Finance. So once we get through those, we'll be able to report back through our auditor's annual report later in the year, any findings from that. Page 21, so this are the recommendations that we've raised specifically in this year. Now, some of them I have already talked through, so I won't go over them again, but I just wanted to flag that finance team capacity is in there. We've raised that in previous years as well. Now, we are aware that we've got the Director of Finance. There's also an interim head of finance now. So we're happy that it's moving in the right direction. It's just about making sure the rest of the finance team are getting that training and that upskilling that will benefit them as a finance team. These are then continued on page 22. The extra one that I haven't spoken about previously was around asset manager. So this is what led to the Gresham Road error, essentially, was that the error had been corrected in the ledger, but it hadn't been corrected in the system that sort of keeps track of all the assets. So we've advised that that should be reviewed to make sure that the asset manager system is completely in line with the sort of ledger and the rest of the council. Now, page 23, this sets out the prior year recommendations. Both of these are still in progress, and they've also been detailed on page 22 and 21-22. So we'll continue to monitor those going forward and see what the progress is on those. Now, page 24, this is the actual adjustments that have been made to the accounts, and in the draft, or in the version of the accounts that are in the agenda pack they have been made. So I've already spoke about the first three, but the last one relates to an opening balance on infrastructure assets. So essentially we tested 4 infrastructure assets to identify whether the council actually owned these assets, and it was identified that the council didn't. So this was because there was an agreement with the county, and that agreement was terminated, and when that was terminated, the assets transferred back to the county. So there was an adjustment that the council have had to make for that in order to dispose of the assets. But again, that doesn't affect your general fund balances. It all goes through sort of unusable and in the technical accounting side of it. Now, there are a couple of items in red on that slide, and once we've gone through and just checked the adjustments that have been made by management, we will issue new slides just to confirm the amounts involved with those. Now, page 25, this sets out a couple of the disclosure changes that the council are due to make. I've spoke about the first 2 when we did our progress update a couple of weeks ago, but the new one that's in there is there's a prior period adjustment that needs to be made. Now, all it is it's just a change in portfolio between arts and leisure and finance and civic. It doesn't actually affect the net cost of services or anything like that. It's just a movement between 2 portfolios. So once we've got that it's already in the set of accounts that you've got, but once we've checked that, then we'll be happy to confirm whether it's been made accurately or not. Now, page 26, these are the unadjusted misstatements. Now, the reason that a lot of them aren't adjusted for is either because they're extrapolations, so they're not true errors, they're just estimated, or they're changes to estimates which aren't material, so they don't require to be changed. So the first one was in relation to our addition sample. So we identified one error which had been accounted for at the incorrect value. And if we extrapolate this error, it comes out at an impact of 171k. The second one is following on from the infrastructure error that I mentioned like a page or so ago. There's an element of those that we haven't tested. And so we've said if we apply the error proportion to the proportion we haven't tested, the potential error will go there, but we're waiting to prove the adjustment first. The maximum value of the error, though, just to put it in context, is about 290k, being the value of items that we haven't tested. So we wouldn't assume that to be material. The third one then is the annual leave accrual. So this one is based on the number of days carried over. And on average, that's 7 days, but there is a policy that the council has that you can only carry forward 5 days. So essentially we've said, well, if you'd stuck to the policy, the maximum the possible error of over provision is 127k. Again, that doesn't affect general fund balances if the council chose to adjust for that anyway. It just all goes through the technical accounting side of it. And finally, there was a small error identified on our expenditure testing, and that gives a possible extrapolation of 94k. So page 27 sets out the unadjusted errors in the previous year. Now, one of these relates to the council dwellings valuations, and in particular the assets within the beacons. Essentially last year there was a couple of houses, I think they were the ones with garages, were put into beacons without garages and vice versa. Now we've done a test this year on the beacons and we haven't identified any errors, so we're happy that that one has closed now. The council did confirm that they'd done a review of their beacons to make sure that the assets were in the correct beacons. And the second one was around investment property. Now, because investment properties have to be revalued in full every year, that one has been negated. We haven't found any issues in investment properties other than the car parks thing we spoke about earlier, but that isn't an error, so that's that. Page 28 is our fees page, and it sets out the fee which was communicated in the audit plan. We are currently in discussions with the Director of Finance to agree on what the final fee will be, considering the delays on the audit. And then on page 29 is our letter to the committee, which updates from a letter we sent in September that the VFM work will be completed by November 22. So my plan was to ask for any questions there before we move on to the other 2 items. Is that okay?
Does anybody have any questions? Councillor Watkins.
Yeah, thank you. You probably have covered it. I just want to make double sure. The one concern I've got is about the valuation of the general purpose blocks of flats. I know that you've said about the council-owned buildings, and the other areas that was found was in Pingle Stadium and Gresham Road. I just want to make sure that you're happy that each block of flat is valued correctly and is in the assets as as correctly as can be. Are you happy with that?
So with the flats, they will be included within the council dwellings and the HRA valuation. Now, we pick a sample from the beacons and we haven't identified any errors in that sample, which leads us to believe that the flats, which are included within those council dwellings, are correctly stated and correctly valued in the financial statements.
Any further questions? Right. Up to you then, Will.
So I'll take the next two as one, and then if you've got any questions at the end, just let me know. So the first one is our audit opinion. So this is a draft opinion. As we said earlier, it's unmodified, and we intend to sign it in September. There isn't much else to say on this, really. We haven't added in any specific areas, so that was that one. The next one is then the letter of representation. So this is management and you as those charged with governance letter to us as auditors, which sets out the representations that have been made by management to us as your auditors, and it's a standard letter for all engagements, so it'll probably look quite similar to sort of ones you've seen in previous years. There are two main areas I just wanted to point out, though, that are tailored to Nuneaton. First of all, it's paragraph 11 talks about the unadjusted misstatement and that they have not been adjusted in the financial statements, and paragraph 14, which mentions a prior period adjustment. It was in yellow at the time of drafting because we weren't sure whether it would be a prior period adjustment or not, but it has been confirmed now that it is a prior period adjustment, and so that representation will stay. We just need those charged with governance to confirm that they agree with the representations made in the letter. Now, if you've got any questions on either of those, I'm happy to take them.
Does anybody have any questions? Councillor Evans.
Am I allowed to talk about the statement of accounts at this stage? Because I've got two questions on that. Or is that later?
You happy to ask that later?
Yes. Yes.
Yeah. I have no questions. It's back over to you then, Will. In that case then, Carl, would you like to ask your question?
I can. Page 94, I've got two questions. First of all, Hart, it lists the Hart contributions for 1920 and 2021. Is there a reason why Nuneaton Bedworth Borough Council's contribution isn't listed on the table? My other question was Pride in Camp Hill. It's referenced that in the 2021 financial year, they owed us £58,195. I just wondered if you could provide the committee with an update on whether we've managed to recuperate that debt as of yet. And the other point I wanted to ask as well was just confirmation on something. We have a new sort of conspiracy theory organisation in the borough that is making allegations that corruption is taking place around council tax and making allegations of fraud. These are obviously allegations of a criminal nature, but could you just confirm to the committee that under the Local Government Audit and Accountability Act of 2014, a local resident is actually allowed to object to the statement of accounts if they believe there is a genuine reason why those accounts are not true and accurate?
Okay, thank you. So in terms of all your individual questions, I'll go for the last one first. Yes, the member of the public is able to, if they've got a genuine reason as to why they think there's a problem with the accounts, they can put that forward to the Director of Finance and to the auditors as well if they feel there's any major concerns in the governance arrangements at the council. So yes, that is, they are able to do that. In terms of all of your other queries, there's a lot of things you've asked for some actual specific detail on there in terms of have people paid certain amounts of money and different things. I'll need to go away, take note of those questions and come back to you if that's okay. And I'll come back to the whole committee so everybody has the same response. But I think in terms of looking at the Hart question that you got specifically, that's showing the capital contributions that we've received, the council have received from other people. So our element won't be in that because that's just about what we've received to manage for other authorities, is why we're in that position with the Hart. But But other than that, in terms of your question about Camp Hill things, I'll come back to you with a response on those separately, if that's okay.
Does anybody have any further questions? In that case then, the recommendations of the report are that the audit findings report and draft opinion on statement of accounts are noted. The delegated authority is given to the Director of Finance and Enterprise and the Chair of the Audit and Standards Committee to sign the accounts once final checks have been completed by the external auditors. That the letter of representation be approved as an accurate and signed once final checks on the accounts have been completed, and that the annual governance statement is considered and approved. Do I have a proposer for that? Councillor Evans. Do I have a seconder? Councillor Kenny. Can we move to the vote? Is everybody in agreement with that? That's carried. At which point, if we have no other business, then I would like to bring the meeting to a close. Can you stop the live stream, please, Maria?